No, aloha everyone, Joshua Hayes at bigwavetrading.com. Video lesson is going to be a little different. We're going to use my trading view charts for the overall market analysis, and then I'm just going to review one stock that's actually hitting a new post signal, post alert, post entry high following Friday's session. Explain why I went long, tell you I've already taken profits on the position, but it's still true. And if Interactive Brokers wouldn't have been giving me issues with my bracket orders, I would still be long in position. But I'll currently tell you where I would have my good to cancel sell limit profit levels and where I would have my trailing stops on the position. But first, let's go through the overall market. I finally have a pullback. Yay, finally. And it's lasted more than 1 day. It's actually been 2 days. But I've been down this road before. I've seen a 2-day pullback here. Moved higher, saw a 2-day pullback here. We moved higher. Now we got a 2-day pullback here. Now the difference is when we had this 2-day pullback and when we had this 2-day pullback, as you can see, the TSV line was positive and expanding from its signal line, the lead line to the signal line. Same with the PPO. It was uptrending, signal line moving higher, TSV signal line moving higher, and we were expanding in that lead line, in between the lead line and signal line. Now we've got a 2-day pullback. You can see here, this is why I'm using the charts, because I like that it puts a background color here. I can't do that with Telechart. And if I cannot download Telechart version 20. Telechart has updated to version 20, but yet it keeps loading version 19 for me on all of my computers. So it has to be something with my user login, and I can't do anything with them until they get back to work on Monday. For me, I never stop working. So anyway, background color is there. We can see that that's red now. We can see the PPO line is starting to tighten. We're starting to get less space between the lead line and signal line. And the PPO histogram, where before it was moving up, it's now slowly descending lower. It's still positive overall. Everything is still positive overall. But this 2-day pullback is a little bit different in relation to the previous 2-day pullbacks on the SPY. And I thought we would find resistance initially at the 38.2 Fibonacci level. Then I thought we'd find resistance at the 50% Fibonacci level. We did not. So now I'm thinking, hey, maybe we finally found resistance at the 62% Fibonacci level. If we haven't, we still have this 78.6% Fibonacci level. And what I don't have drawn on here, because I normally use this to trade the futures, we don't have the 50 and 200 simple day moving average on the, because I don't want to clog up my charts because I trade the futures contracts with it. But this is what the SPY looks like. So we see the SPY here. I don't know if it does the S&P 500 with the volume on here. No, it doesn't. So let me go ahead and pull up my futures contract because it does have volume. But you can see the same thing with the futures contract. Daily chart moving higher. You got them moving higher with the lead line over the signal line. You're starting to contract. So the SPY and the ES confirm each other. Now, as we look at the rest of the indices on a daily time frame, the QQQ, we can see the same thing. We had that TSV and the PPO line moving higher. Now you can see the red background means that we've crossed below the signal line on the QQQ, and you can see that we're tightening here on the PPO. The overall histogram trend is down, so it looks like we could have a pullback. Now let's just go through the rest of these really quick before we go to the higher time frames. The DIA, same thing. We've had the cross. We've got the PPO tightening, curling down, histogram moving lower. The IWM has shown itself as strong index lately. It's been more strong from the rest of the market. Look at it breaking out above the recent highs. It continues to show relative strength. Very impressed there. PPO still looks good, but the TSV has gone a little bearish, and you can see that we got that red background now. So that's what we look like on a daily. We're finally starting to turn from the bullish overall condition. Once again, I'm starting to think about just trading using stops with just the TSV indicator on a short-term time frame. But now, like I said, let's go to higher time frames. You want to see basically a universal continuity between all of the indices, I should say. Like everything should line up on each time frame. I'm not that intelligent, guys, so I don't know what the word I'm looking for is. Confluence, I guess you could say. So we want to see everything basically look the same across the board. So now that we have this red here, how does the weekly look? now that our daily time frame has turned from bullish to bearish on the short term with the time segment volume. Weekly, still negative, still bearish. And on the IWM, it has been since the downtrend started. And you can see the PPO, the histogram is moving higher, but the PPO lead line has flattened out with the signal line, but still that is bearish, correct? That's a big wick on that weekly chart too on the IWM. I don't even know if that's right. That clearly doesn't seem right at all. The DIA though, you can see the wick there. You can see the TSV and the PPO below the zero level first off on both of these. So they're both below the zero line. The signal line and lead line is below the zero line. Same with the PPO. Still doesn't look good on a weekly time frame. QQQ, signal line starting to move below the zero line. It's not quite there yet, but even on a weekly time frame, doesn't look good. We're about to have a cross in the PPO, so that is kind of good, I guess you could say. But still, overall negative, doesn't really show anything super bullish. So we got time to wait it out there. DIA, that's next. Bearish. SPY, which is the main one that I focus on. As you can see, clearly below the zero line, signal line and lead line. Below the zero line, PPO, lead line, signal line. It is curling back up, but still overall bearish. And then, of course, my highest time frame that I look at. And this is the time segment volume that I always trust on the monthly time frame. So you can see here, going back to the SPY, when it's green, when it's above the signal line, good things happen. When it's red on a monthly time frame, bad things happen. When it's green, good things happen. Red, hey, it still worked good, but you notice the PPO line. But once again, it gets red again, bad things happen. Green, good things happen. See how it's red here? Overall, it goes nowhere. Then it's green again, good things happen. Gets kind of choppy from here. When it's red, bad things happen. Then it's green. 2017 was the last time I made a lot of money with my end of days methodology. Good things happen. And as you can see on a monthly time frame, we've been bearish since September into October of 2018. The first divergence I've ever seen to that length and extreme with a negative TSV. But if you look at this TSV, you can see it's been red almost as long as it has been back here. Red for longer than it even was during the 2008 to 2009 downtrend. And right now, it's starting to come on par with this 2000-2001 time frame. So that's what the DIA looks like. You can see TSV is not good. PPO is above the zero line, but it is bearish. So there's nothing there, really, to be bullish about. Same with the DIA. It's been red since July, August to October, September to October, 2018. You got the bearish PPO line. There's nothing really to be too bullish about right there either. QQQ. You can see it attempted in April to go bullish, and then immediately we go into May back to being bearish. So here's the key here. That signal line. It's still downtrending on the QQQ. You're going to want to see that start to flatten out, curl up, and then get that cross higher. Like back here. Excuse me. Crosses higher, kind of flat lines. Now the signal line. You can see how it's trending higher there. Here we still have the signal line starting to try to flatten out, but it's still overall downtrending. But we got 1 month, excuse me, on the QQQ of going positive, and then we're back to negative. And of course, on the IWM, we've been bearish on this one, and it's the only one that's told the truth price-wise since June to July of 2018. This red condition, unfortunately, it doesn't. IWN doesn't have data on a monthly basis going back to the 2000, 2001 bear market, but this length of a negative bearish TSV is the longest on here since we have data for the IWM. And if you look at the length of it from going back to that 2018 negative bearish cross, that length right now, if you remember what the SPY looked like back in 2000 to 2002, is on par. So very long bearish trend. IWM, extremely long. And if you look at this TSV indicator, does it look like it's ready to turn up anytime soon? No. Look at the PPO monthly. Does that look like it's ready to turn up anytime soon? No. And if we get in tight on the SPY on a monthly time frame, It tried to, but now you're a little bit more separation in PPO. Nothing there looks bullish. So until that monthly time frame is bullish, I can't be excited about any rally. I can't have any conviction behind any end-of-day long positions. Intraday is the only time frame I trust because it's the one that I'm not going to wake up and I'm not going to be in an intraday position, let's say at $10, and then all of a sudden in the next 1 minute bar, it's not going to open at $6. First off, if that happens, it's due to an offering and there's a halt, and you're on the backside almost every time of a move. This almost never happens. In fact, I can't even remember the last time it's ever happened on a front side of the mood, except for if it's a sketchy stock and it goes from $1 to $10 straight up, and then it gets a T12 halt. So that's like the only time you ever have to worry about that. And if you're in a stock from $1 to $10 and you're in that whole move and you're chasing up there to $9, $10 in a sketchy stock that has no catalyst news, is just a piece of shit company, that's on you guys. You got to know what you're involved in. You got to know what you own. But the bottom line is, you don't see that. You don't have those kind of gap downs. So the whole point is, I'm not going to be able to take size in anything until this monthly time frame goes bullish. And then, of course, like I said, you want confluence. I want to see it on the other indices. Then I want to see it confirm, eventually then turn bullish on the weekly. And then if you ever get the monthly with the weekly with the daily all in confluence, especially on multiple indices, bam. And if you get a great signal, you can push it all in. Now, the most I'll put in any one position is 20%, but that's when you start to see me really swing for the fences. This kind of market environment's not for me. When I have a bearish monthly TSV, when I have a VIX, do they even do the VIX on this one? I think they do. When I have a VIX over 30, which you can see it's still over 30, I have problems. My end-of-day methodology is not good with a VIX over 30, a negative monthly, weekly, daily TSV, and without hot chart patterns. You know, I take it easy. I stick to intraday time frame. And on Maui, it's very difficult. But I still alert them in the chat room, even if I can't trade them. So with all that being said, I'm going to wrap up the video lesson. So just bottom line, market, sketchy. Daily time frame was the only bullish time frame. And you can see that we're finally going negative here on the TSV. PPO's tightening, trying to roll over. Histogram's moving lower. We're at that 62% Fibonacci level, so I would expect a deeper pullback. However, support here. Got that gap fill area also back here. Of course, support down here. There's also multiple moving average lines. We have that 21 EMA there, and there's others, various levels. You could also do Fibonacci projection symmetry, measuring it from the, basically, you could go from this high to this low to this high. You can go from this high to this low to this high, and you'll start to get other Fibonacci projections. You go from this high to this low to this high, and you'll get other Fibonacci projection support levels. I do those on Thinkorswim. I don't do them on TradingView. I can start to do them now on Telechart. I finally figured out how to work it, but that's for a different video lesson. Let's go ahead and wrap up the video lesson with the one position I want to go into detail on just to show you how we get long certain names and how we hold them when they work. When they don't work, I want to remind you, we always cut losses. I never hold on to a losing position. And in fact, I'm so tight with cutting losses that I take myself out of trades before they can even work. Let's go ahead and go to the other charts. So speaking of getting myself out of positions too quick, you can see RCL. See that white arrow there? So after I get a long signal, here it was a candle over candle, heavier above average volume, max green bop. Whenever I get a long signal in a security, the next day, if I get filled and enter it, I put it in my Telechart watch list. So that's where this white arrow comes from. So I got long RCL that day. But I was so cute with my stops intraday that I just kept partialing out of them. And I took myself completely out of RCL out of fear that it was going to reverse. It was irrational, it's illogical, and it's not how I normally trade. But this market has me all kinds of twisted right now. It's one of the biggest, it's still to me a bear market bounce, but even though it's gone up 20%. But after the fastest decline ever from all-time highs to a bear market, and the fastest ever rally from a bear market to a quote-quote new bull market following a 20% gain, especially with volume profile being so wrong. I remind you, we did not get any kind of volume capitulation off this low, and we did not get any official retest of this low. So it's hard for me without one or the other to believe that this is an actual low. Could it be? Absolutely. And I'll take it if it is. But without those being around, I'm nervous with everything. So RCL, I took myself out of the position before it could even work. Had I held on to it, we would have already been taking profits along the way, as it got a 30% gain in 4 sessions. Would have been taking profits at 10, 20, 25% on the way up just because of this tape. So that's what this market's doing to me. And it took me out of RTTR also, but this was more Interactive Brokers' fault. They're not holding my bracket orders correctly. Their customer support is the worst in the business. There is no one worse than them. You can tell them that I said that. Nobody cares, first off, but they're horrible. They're absolutely horrible. They're incompetent. They don't know what they're talking about. They have a basic rudimentary understanding of how stock market works if you use with their customer support on their chat. So I've got to give them a call. And if you've ever tried to call them, it can take forever to get a hold of anybody that knows what they're doing on that level as well. So RTTR was already in a long position way back here, right here. This was the official entry long signal. Didn't get a position on it. And as you can see, it had moved 283% in a little over 2 months, or actually 2 months, which is incredible. But right here, this was the signal date. Candle over candle. Let's see what it looked like. Candle over candle. Beautiful. Heavier above average volume. Max green bop. Price or pocket pivot point signal. Worked out beautifully. Never ran any stops either on the way down. But as we come back, pardon me, I keep having cough issues over here. I don't know why I'm drinking coffee, but it's doing something in my throat. But anyway, as we come back down here, RTTR, another candle over candle. This time not above average volume, but heavier volume. And look at all this max green bop. Oh my God, guys. This used to happen all the time back in the good old days before 2008, before algos, high frequency trading, 1 trillion ETFs, and illiquidity hit the market. So it was just amazing. Used to get these setups all the time. But finally, tons of max green bop, candle over candle. Pocket pivot point signal, we get the long signal. So the game plan is to get it up and through 1 tick above the high of the day, that session. You could also use the closing price, but I use the high of the day session. So RTTR, that's the game plan. First cut loss level is right here. 50% of my initial stop would be here. The final 50% of my stop would be here. And I figure out how much I put in a trade based on how much I'm comfortable of losing at these 2 stop levels. So I add the 2 stop levels up, divide by 2, get that number, and then divide what I'm comfortable losing, which is normally for me just around a couple $100 in losses. That's all I'm willing to take right now. Normally it's $1,000 plus because I put in a larger dollar amount per position. But for right now, a couple $100 is the max loss I want in a position. But anyway, RTTR, I hate these 4-letter ticker symbols that only have 2 letters in them. Triggers and fills the next day. Everything's good. Now, Interactive Brokers has given me issues, so right here, I actually take all of my profits on RTTR. But RTTR pulls back, it's orderly, nothing changes, continues to move higher, and this is what it looks like right now. Since the long signal in RTTR, it's now up 35% and about, what is that? 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 10. So basically 3 weeks, we have a 35% gain, averaging 10% per week. Not too bad. Now, I would already, if I was still long RTTR, would have put 50% of my profit target or good to cancel sell limit level at 36 had I still had a position. You would have then been taken out a half on this day, leaving you with 50% of the original position. As you can see, it's moved higher. So now, where would I have my stops if I was still long this name? Well, first off, my next profit target level where I would put 50% of my good to cancel limit orders would be at 50 cents for now. The next 50%, which would be 100% of the position profit target level, would be 86 cents. So that's where that would be. Personally, for me, this is what I would do for the final stop. Draw that uptrend line right there. A close below that uptrend line would get me completely out in a market like this. Now, if you don't want to do that, the next thing we do is we use logical support levels. The first logical support level is right here in this base right here. So this is where one would be. This is where my final stop would still be. So I do half-half here. Now, me personally, I would never do that. That's a little too loose for me. So since I can see this as being a support level, I would put 33.33% right here, 33.33% right there, which would basically ensure gains here, small losses here, and slightly bigger than small losses here. So 33.3, 33.3, 33.3. But I would recommend new traders to keep your losses and your gains small, to use the uptrend line, and that's how you get out of it. All right, everybody, we're at that 20-minute mark, so I'm going to wrap up the video lesson. Guys, you haven't been showing me as much love as you were earlier. Comments would be greatly appreciated. Talk to me. It's lonely over here in Maui in the coronavirus outbreak. Comment, questions, concerns, statements you want to make, let me know. You want to yell at me? Let me know. You don't like the video lessons? Let me know. Give me a thumbs up if you enjoyed the video, if you learned something from it. Thumbs down if you didn't. And remember, if you haven't subscribed yet, hit the subscribe button or ring the bell. I appreciate all the love out there. I hope everyone is doing well. I know it's a stressful time. A lot of people aren't working. Hopefully things will get back to normal soon. But just remember, after 9/11, it took 3 years for the airlines to get back to their same load factor and capacity levels that they were at pre 9/11. So it might take a while. Just keep that in mind, everyone. All right.